Hello and welcome. Thank you all for joining us here today for this session. We all know that for prosperity, companies need to do well, but they also need to do good. We also all agree that companies that do good do better. Companies that apply ESG do better financially. In fact, ESG investing has become mainstream and a prerequisite almost for attracting capital. Global funds that invest in ESG qualifying assets have topped the $1 trillion in 2020. The stakes are therefore high, and it is important for aspiring companies to actually want to qualify. But how to qualify? The ESG standards have not been written in stone yet. They continue to evolve to this day. Consequently, assessments of ratings agencies seem to vary from one to the other, at best. At worst, they contradict each other, and that's within the same jurisdictions or similar jurisdictions. And the issue is exacerbated when we start to use the same ruler to measure ESG performance and commitment in different economies at different stages of development. The current scoring system is intended to identify strong ESG performers. However, it ends up penalizing those in emerging markets. Unless the standards are inclusive of the realities and limitations of emerging markets, large chunks of the world, including some of its biggest economies, could be left out, penalized for not fitting into a framework that does not take into consideration their local realities. So how do we go about redefining ESG? With me is an esteemed panel. Allow me to introduce him to you. On my left, Mr. Khalid Al-Hussan. He is the CEO and board member of Tadawul, the US $2.4 trillion Saudi stock exchange. Mr. Al-Hussan sponsors key programs within Tadawul and its inclusion in main international indices. Joining us from Singapore, Mr. Boon Chye. He is the CEO and board member of the Singapore Stock Exchange. He is responsible for transforming SGX into a world-class multi-asset exchange with a market cap in excess of $8 trillion. With us on the stage here is Mr. Sherif Foda. He is the chairman and CEO of NESR, the NASDAQ-listed oilfield services company that operates here in KSA with a market cap touching $1 billion. And last but not least, Mr. Scott Minard. He is the founding and managing partner, global chief investment officer of the $250 billion fund and a member of, Guggenheim Partners, a member of its executive committee. Sherif, allow me to start with you. I'd like to start with you. When it comes to ESG, it is really a tale of two markets, the developing markets and the developed markets. And you voluntarily chose to straddle the two markets. You operate here in Saudi Arabia, and you are listed in the NASDAQ. So what challenges do you face and do you find when you are, as regards to ESG, and what your regulator in the States enforces on you or expects from you?
So thank you very much. Thanks for the question, and a pleasure to be here for the fourth time. So let me start after, obviously, the fantastic presentation of yesterday. And it's very clear how important is the ESG and how important is people have to change their mindset from, I would say, risk-return to risk-return and impact. What is the impact of our industry to the community we are in? And I think if I look at what we wanted to do, we wanted to make sure that the company from the MENA is, I would say, has all the ESG compliance trademark. And that's why we listed the company on NASDAQ. Is we wanted to first to list the company on what we say, the stringent rules. And if I look at the G first, we can comply. yes, you can. And the first thing we did is we took 25% of the board to be have gender diversity. When we expanded the board, what we say the minority, we make sure that we are as well. So we are compliant with that. If you look at your shareholders, the biggest shareholders, you can tell that we convinced them to bring a prominent figure to be an independent on the board. You don't have to have 3 or 4 board members from the biggest shareholder, again, that you are compliant. If I look at the, I would say the compensation, what they look at very, very closely, we have the CEO to the median pay is 33 times, which is best in the US and best in Europe. If I look at this, yes, you can comply, I would say. I would actually comment, and giving you the best example is Aramco. Aramco today have the program that they put Ictiva in Kingdom Total Value Added. This is S in its best in class. How you develop the community, R&D, Saudization at 70%, SMEs, local manufacturing. All this is already there, right? So I strongly believe that we can comply in the emerging market to the SNG at the highest level. Now you come to the E, that's a different story because obviously our economy is built on oil and gas. And that's like, you know, it's not really the investment community will not invest if you're in fossil fuel. However, you can have action, what you call to make carbon neutrality. So carbon neutral barrel. If I give you an example today, the world produce 200 billion barrel of water per year, the oil and gas. Half of that is used as re-injection and reuse. Half of it is wasted. We can do so much with that waste.
Yes.
Is to create forests, to get carbon credit, to give, and there is a technology, innovative technology to change that.
Okay. Khalid, you are in the process of putting together some guidelines for your market, your listed companies to comply with for ESG. What is it that you are taking, given that there are no really universal standards, what would you put into those guidelines?
So thank you, Cyba. So basically, I think you touched on a very painful area, which is basically there is no clear standards for ESG. There are several standards that are applicable internationally, and I think this is the core issue with ESG, in my opinion. What we are doing on our ESG guidelines is to basically help the Saudi corporates to understand how do they meet the ESG requirements to be reported within the evaluation of their company. So we're putting in place the guidelines for them on what the ESG evaluators are looking for, in which form, whether this is a regulatory compliance issue, if it's governance, for example, or in environmental and sustainability. So this is we believe, will act
But
as...
surely a lot of local norms are not in direct alignment with what would be in international, whatever standards there are at the moment. So how do you appease the ratings agencies? Are you finding that you're under pressure really to put in guidelines that please them, that gives your companies good ratings against their culture?
Absolutely not. As an exchange, we'll always act as a mediator or intermediary between the investors and the issuers. And as spoken in many panels before our session, investors recently, especially after the pandemic, are pressuring more toward ESG investments. What we are trying to do here is just educate Saudi corporates about the several standards that is available and what platform and channels they use and report. We are not here to create our own Saudi standards at this stage.
You will not be going the way Brazil did, for example, to create your own standards?
No, not at all. We will always target local and international investors. So what we want to make sure within these guidelines is to educate our local issuers about these standards.
Mr. Law, can I just ask you, you are one of the most advanced exchanges in Asia. What challenges did you come up against the ratings agencies when you had to put down standards that also matched your local realities, local cultures, things that are not acceptable in the in other jurisdictions?
Well, I agree with Khalid that I think the lack of international standards is clearly one major hurdle. In the ideal world, we should have international acceptance of standards. But if we look at, so that everybody can speak the same language, but if we look at accounting standards, it took decades for the world to agree on some common standards. I hope we don't have to wait that long. For emerging markets, or even for Asia, or for the various developed markets, even across sectors, let alone rating agencies, across different sectors, there are clearly different factors to look at. So one way to think about the different ratings that have come out is really to look at material factors. So we work with companies, we look at different sectors, we try and forge consensus to say for a particular sector, what are the key material factors that companies should try and disclose? And if there's some consensus, we could then have rulemaking to have companies to make those disclosure. Many exchanges, including the Singapore Exchange, have made the requirement for sustainability reporting. It's not just to report it, but what are the material factors to report? And I think we as exchanges could bring issuers and investors together and try and forge some of those consensus.
Scott, how do you measure something when you do not have a ruler? Does the lack of universally accepted standards make it difficult for you as investors to assess ESG performance, specifically in emerging markets? And should there be really one framework, one size fits all?
Well, it's interesting you say the phrase one size fits all, because that was exactly what was going through my head. There's a problem with the ESG framework that is currently being implemented and propagated by the rating agencies. And that is to say that if you are in a certain industry or you do certain things in terms of, let's say, carbon emission or something that is socially irresponsible, like selling tobacco, that therefore you get a rating for that that reflects the steady state of where you are today. But what's not being factored in here is the willingness of companies to evolve. And so, for instance, there are tobacco companies that have made commitments to eliminate tobacco completely by 2035 in their business operation. But those companies get scored the same way as someone who has made no commitment to improving. And so this raises a real question at a practical level, because the tobacco company that's trying to be responsible and make the transition has to have capital to make that transition. So if we apply the same standard to the tobacco company, which is trying to evolve and is committed to change, versus the one who is really operating in a steady state, then we're punishing them for trying to improve, and we're choking them off from the capital that they need to evolve. And I think that this sort of a story is playing out in the energy industry. I think it's playing out in all sorts of areas where this one-size-fits-all approach of this is evil and this is good, based upon the latest set of data, is actually inhibiting the ability to make progress in this area.
Khalid, let me come back to you and ask you, you said that you're not going to set up your own standards, but do you feel that Saudi companies could be disadvantaged if they adopted or were asked to go by the standard, considering things in governance that are culturally different from other jurisdictions? Let's talk about company structures. Maybe family structures are not looked very favorably upon by ratings agencies, and they are a big part of this part of the world?
So, again, it will always depend on the rating institution or rating agency. The rating is happening anyway for Saudi corporates and many other corporates in the region or in emerging market. I think what we're trying to do is to always avoid that when we link this to a performance indicator, just like indices, to reflect what Scott has mentioned. There are sectorial issues that specifically goes to a certain sector. There are differentiation between a contributor versus a passive contributor. So we'll always make sure that we challenge even the rating agencies on their rating on Saudi corporates if the case is right. And I think, as mentioned earlier, this is also the idea from large institutions. What's important for us, Cyba, basically, is to stage these developments. As Leo was saying, it takes time for this to mature. And the way we want to look at it here is, in my opinion, three main pillars: awareness and education for issuers, making sure that the rating agencies are fairly rating the companies based on the so many angle of these companies, whether they are social or environmental. And the last thing is to measure the performance through creating the right indices for that. So these are the three pillars, in my opinion. And as an exchange, we stand to initiate extreme effort in all of these three pillars.
Okay, we have 90 seconds to go. I'd like to hear from the three other speakers very quickly. What ideally would you say we would need to evolve, to innovate in ESG, to evolve the standardizing and the
So I would say I'll just touch again I think on the E. I think we have to evolve to understand and believe we can make a difference.
Yes.
And I think people have to differentiate between companies trying to do something and companies are not trying to do something. The best example, for example, is methane.
Yes.
We can take this emission that is 80 times more toxic than CO2. Everybody only talk about CO2. We can inject this and we can do something about it. And that's what will change the image of the energy sector.
Okay. Scott?
You know, I think that the whole scoring process should be across a broad spectrum, and that each category should receive a score, and there should be an indication as to whether that score is rising or falling based upon what would be what the policy of the company is and what they're trying to pursue. And then, you know, you could come up with a universal scoring system that we could all share, and we could evaluate, you know, our investment decisions based on that.
Boon, Chye, from your experience in Singapore, what would you say the best advice you have?
I would say that briefly, new and more standards are not the solution. I think there could be a tripartite partnership. Listen to what investors are looking for. Help companies to disclose material factors. This will also, thirdly, help rating agencies to have better information, and they should then triangulate to see what makes the most sense for companies and investors.
Thank you all very much. Thank you for joining me and for shedding some light on this very important issue. I hope that we will see ESG standards soon put in place. Thank you all.
Thank you.